Hi there. A very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this live podcast with you in this live session on YouTube. I'm sorry. So, in this live session of YouTube, just Patreon got onto my head. And today I want to discuss with you about the markets per se and how the market has been behaving and how the market is set to behave going forward and what is the you can say concentration of the market looks like and where we could see more kind of returns say 6 to 8 months down the line. We are in September, so by March April where I see the market going. So we'll discuss that, and also I'm going to answer all your queries, whatever queries that you would be having. So I'm a little bit late, 15 minutes late, was setting up things. uh, Hi, afternoon, Satadal, Nikhil, hi, Krishna, hello. So let more people join in and then we'll discuss in earnest about the stock market and where the money could be made as we move along, and probably a third wave is around the corner. So what we need to be careful of, etc. Um, Good afternoon, hello, hi, there, Sharat. And I'll also answer your queries as well. And if you have any queries that you want to ask midway, you can ask through super chat, and I'll answer that immediately, taking that super chat queries straight away. All right. So I hope that investment and trading is going on well for all of you who began investments in early part of probably this year, and who have been investing in the market since 2020, 2019, and even earlier than that. uh, Hope your stocks are also doing pretty well and you are performing well on both investment and trading front. So I want to discuss about the market PE and the EPS of the Nifty that it's going to produce going forward, say in FY23, and where I see the market going forward. So you need to understand how the macro environment is. So currently, what is happening is your fixed deposit rates, your bank rates, savings rates are not that great. Between 2.5 to 5% at best, 5.5% if you call it in FDs, and that's why people are looking at other revenues to make money because they have looked at say a Bitcoin making so much of money over the last 2 3 years, 4 years, and even the stock market. There have been a number of companies that have gone up 8, 10, 15, 20x over the last 3 to 4 years. So if we go back, uh, even before 2020, if we go to say the fall of 2018 and 19, when all of mid and small cap fell, uh, the stocks fell a lot. So from there on onwards, say from the valuations of 2019, when some of the sectors were absolutely bettered, and then the culmination was the pandemic and 2020 Feb fall. From there on in, we have seen a smart return. We have seen smart recovery in many of the stocks. That's one thing, and we have seen smart returns come up in virtually all the sectors except for few companies. We have seen that happening, not quite in financials. Many of the financials have not performed that well compared to other sectors, but still a lot of companies, a lot of sectors have done appreciably well from the lows of 2020. And if you remember, we hit around 7500 in those lows of 2020. uh, what lies ahead? So if you look at into if you take into perspective, what happened was from there on in, people had the money and people had the funds to invest. I mean, globally, many people lost out by selling in that downturn between 2019 and 2020, but then a lot of new individuals have opened their account, have opened their trading account, and have started trading and investing into the Indian market from 2020 February onwards, and they are making big money. So we need to now put things in perspective. So I was just thinking of how the markets have behaved over the last say 15, 16 years, over the last let's say 13 years, 13, 14 years, because the last peak of the market in that bull run was the 2004 to 2008 bull run. And we saw that the markets amassed 6,257. That was the high made on 8th of January 2008. And then the market started to fall. If we take that as a benchmark, 6,250, for example, and if we say that the markets and normally equity markets give 15% CAGR return, that's double every 5 years. That's what we call it. So double every 5 years. So if we take that as a benchmark, and we take 15% CAGR returns, then we should have been 12,000, somewhere around 12,500 by March of or January of 2013. And by January of 2018, we should have grown to 24,000 already. That is taking into perspective a 15% CAGR return. Now, we don't take into consideration that the EPS fell of the companies, etc., and many of the other matrices. But if you take 15% CAGR and double every 5 year matrix going forward, then by 2018 you should have been at 24,000, and by probably by 23 we should be even higher, maybe 40,000 on the Nifty or something like that. Uh, but let's go back again. So 6,250 in 2008, and this is 2021, 13 years, and we are at 16,000 on the Nifty, 17,000 on the Nifty. So the returns has been around, you can say 3x, around 3x in that period from 6,200. That is, uh, we have gone up something like 280% over 13 years, and that's a CAGR return of only 10-11%. So I believe that going forward, this all is going to culminate into something special. And I have never been very bullish of the markets, and you would have seen my earlier live sessions and all, and you might say that okay, now he's bullish, simply stocks is bullish, that means the market is going to fall. Well, the market in the interim may fall, may go to 16,000, 15,500. But what I am looking at is by 2023, if FY23 EPS is going to be 800, 850 rupees, I don't see any reason why the market cannot be closer to 24,000, and I don't see any reason why the Nifty could be closer to 20,000 by next year. So by 23 July or so, in less than 2 years' time, I'm pretty confident that the market would be around 25,000 or so on the Nifty, and 20,000 could come as soon as in the next 6 months or so. So in my opinion, this is still a time to invest into stocks that have corrected, that are showing consolidation, and in which you're confident that the next 7-8 quarters could be very good. We'll come to the sectors in a while, but what I'm trying to explain here is that the EPS for 2023 could easily be 850 rupees, and at 850 rupees at 25 times, uh, we can very well see 22,000, 23,000 easily by 2023. But I believe it could be even you can say expensive, the markets, and I am looking at 24,000 or even 25,000 on the Nifty in the next 2 years. So a good, you can say 40% upside is very much possible easily on the Nifty in the next couple of years, even from these levels. And that's why FII have been buying in earnest, as we have seen over time. So FIIs have been particularly aggressive on buying into stocks even at 16,000, 17,000 levels, even when mid and small caps are at such elevated levels, because they are looking at very high valuations going forward. So what I believe one can do is, on any sort of decline, 5, 7, 8, 10% decline in the market, any 5, 7% dip, if that comes in anytime, you need to grab into very top quality stocks, make a list of top quality stocks that you feel in the next 2 years are going to perform very well, and buy big time into those and just sit on them for a couple of years and see what happens, what kind of returns you will get. I'm confident you'll get around 30 to 50% in those stocks. So that's the call. Now about the sectors, I believe that, and one more thing about the markets, that 25,000 will not be the end. If you see and if you believe that 6,000 is perhaps the valuations were in 2008, and let's say 4 years down the line will be in 2025. So in the next 17 years, or let's say next 15 years, by 2023 it will be 15 years. A doubler every 5 years means that you should be closer to 48,000. And then your you can say calculation or compounding of 15% CAGR from 6,000 is faced. Although people will say at 6,000 the market was at 28 times, so let's reduce that to 24 times. So the market was at 28 times at 6,000. So it was the EPS of the market was around 230 rupees. So if we take even 25 times of 230 rupees, so we come to something like 55, 5600. And even from those levels, I see an elevated level of 44,000 on the Nifty. Even if that comes in, although it won't come in, but even if that comes in the next 3 4 years, that won't be something like a huge issue if we consider 5500 as a benchmark of 17 years prior or 16 years prior. So see, one can always give a rationale for where the market is and why the market is. If things change on the global front, if things change in the in the interim with the Fed, and if interest rates keep rising a lot, yes, markets will collapse, market may fall, but it doesn't seem like it's going to be happening in the interim. So in the next couple of years, I see the market go to 24,000, 25,000, and probably in 6 to 8 months we'll see the Nifty at 20,000. So buy into very good quality mid cap and large cap companies and do well. Now about the sectors, one sector that always comes to my mind is IT, and why I believe IT is going to even do much better in the next couple of years, because the rates are going higher here in India, especially in Bangalore, the IT hub. The salaries are going higher. That means they are getting much more the larger companies and the mid cap IT companies, and that's why these companies are trading at such higher valuations. Uh, I think this thing will continue, and we will see this happening for the next 6 to 8 quarters. So next 2 years, I believe IT is going to do extremely well. If you want to discuss about specific stocks, come to Patreon and we can discuss there as well. Become a member there. Second sector that I believe that could do extremely well in the next couple of years is real estate. Uh, we are seeing green shoots of things happening on real estate front, but again, be very careful in which real estate companies you end up investing. So you could invest into something like a Godrej Properties, the larger real estate companies, Sobha, Godrej, etc., Suntech Reality. There are many others. So don't go by what I say just now. So disclaimers apply. I'm just saying that buy the best in the business in the real estate, and the best real estate play for me is Asian Paints. People don't understand that, but if really housing and all that is going to be in boom and that people are talking about, then paint will be in boom. And even if they are expensive, even if raw material cost is there, many other factors are there, I believe that real estate and Asian Paints per se, even from these elevated levels, if you get a dip towards 3,000, 2,900, very good levels to accumulate. And it's a safe return bet of 18, 20% CAGR. So up by around 40, 45% over 2 years. That's what I feel on Asian Paints is. So these are my pick. These are two of the best sectors I think that are going to perform in the next couple of years. And one more sector I want to just add on, because of the lockdown, because of the shutdown, this sector has not really performed for 2.5 years. Numbers have not been that great, but things are going forward, and these are the sectors of you can say consumer goods companies, whether it is white goods, whether it's electronic items, anything related to home improvement, stocks of home improvement, uh, you name it, they will do well once things open up completely. I'm pretty certain, pretty confident that inshallah by April May next year we'll have very high level of vaccination, and we will be out of the woods more or less with respect to this pandemic. This pandemic will linger on, but we will be much better in the business front, and this sector of home improvement will do much better as people will go out and buy things. So a lot of home improvement companies, a lot of electronic companies are listed, couple of electronic manufacturers are listed. You can look at those, and they will continue to perform better. So these are the three sectors in my opinion that are going to do extremely well. All right. All right. So I'm ready to answer your queries. Can you use the super chat and super sticker feature that will help me grow the channel? That help you also ask me questions and eke out answers in greater detail. Uh, so I can answer your questions now. So HDFC should do well, Rashmin, but I believe that rather than buying into financial companies for housing, buy into housing plays, whether it is into, as I mentioned, into consumer goods, into home improvement stocks, or buying into paint companies, etc. Kirloskar Industries, I would say, and avoid look at into consumer centric companies. That would be a better thing to do. Dominic Autos should do well, but they are, I mean, you will take a hunch if you really get into autos from a 2 years perspective. I'm talking of 1 to 2 years. In that sense, I would say autos is not quite the best of the sector to look at. Thanks a lot, Bharat, for your contribution. Let me look at Pokarna. As far as the company is concerned, very good company, top notch company, exports to around 70, 80 countries abroad, with its quads and with the kitchen tops, etc. But let me see how the stock has performed so far, and I'll let you know. So the stock is trading at around 486 rupees. The market cap is around 1500 crores. It has done reasonably well recently. So over the last 6 8 months, it has done well. If you are holding, hold on to the stock. It will continue to perform well. It has not done that well over the years. If you want to buy into it, probably buy around 420 levels or so. If you want to buy more, 420 415 would be better levels to get into something like a Pokerna. Yeah. All right. So SHIL insiders are buying SHIL from open market. I have not looked at it, Nikhil. I'll definitely look at it. A disclaimer: I hold SHIL in my portfolio. I am pretty confident that it's going to come out with 17 18 rupees of EPS in this year, so it should perform well. Thanks a lot, Mahesh, for your super chat contribution. Sir, please suggest five reliable stocks for next 15 years for my daughter's education. Mahesh, can you just email me? I cannot suggest individually on a public platform, etc., and probably will help you out. With the same, if you email me, and the email address will be in the description, so you can use that. And thank you for your contribution. All right. Purvala Finocorp. I need to look at this company and only then tell. See, Intellect Design Arena. I'm not confident of the promoters. That's what I can say. There have been issues earlier with the business. Not saying that the same issue is currently that we are seeing. So probably I would not be able to comment at the moment. Okay. Brightcom, I'm just staying away from the group completely. Yes, if you have it, it's good for you. If you have it at lower levels, you hold. But I look at companies which have a very clean past as well when I get into any sort of company. Birlas of Siddharth is a very good company, around 410 to 430, very good levels to buy into. I see 550, 580 coming in the next 1 year or so, 6 to 9 months. I think this is one of the better IT companies, mid cap IT companies that one can invest into. All right, let's see what is. Okay, Advanced Enzyme is another very good company between 400 to 430 is a very good buy level. Again, a very long-term play. I would say it's not a 1 year play. It's a good 4 5 year play, like a portfolio stock you can hold. A very niche, you can say, space that it works in. A Titan is always a buy. In fact, Titan, you can buy a few here on any 5 7% decline, add more. I think October to December will be big for Titan because of the jewelry sales, etc. I think it's going to pick up. Yes, there is a issue with the third wave, but you have to take that a little bit of risk. I think things are going to get moving, and probably by Jan Feb you'll see Titan at very elevated levels. So that's a good level to probably buy into. IDFC First Bank, I don't have an opinion because banking and financials, I'm more or less staying away. IT and reality. I've talked about reality with Godrej Properties, Soba Developers, Suntech. These are good companies. IT, I would say a Birlasoft, a Happiest Minds, which I am holding, is breaking out again. So that's a disclaimer. Uh, L&T Infotech is a good company probably to get into. L&T Tech Services is a good company to get into. Slightly elevated level these companies are, so what you can do is buy 35 40% at immediately and then wait for some sort of declines to keep on adding into such stocks. Right. Maruti is a very decent levels. If you have a portfolio in which you can hold Maruti over 4 5 6 years, definitely buy at these levels, buy at 6,000. I don't see Maruti breaking 6,000 that easily. So around 6,000 6,400 will be very good levels to accumulate. I see 11 12,000 on the stock in the next 4 years or so. It could happen in 1 year, it could happen in 3 years, it could happen in 4 years, but in the next 4 years, I see doubling of the stock price. I uh, see autos will pick up when things really look good, and we saw autos do really well in 2017. The reason is at that point of time economy was doing well. Auto is directly a play of the economy. The GDP has to grow by 6% 7% for autos to really do well. I would say avoid alkyl amines. In fact, most of the chemical companies I'm not tracking because of the fact that they are ultra expensive at the moment. So probably an avoid, I would say. I would say exit or Jivan Finance or any kind of small cap NBFCs, etc., small finance banks, all these MFE and all those companies. I would say just avoid. That's why avoid most, you can say, financials. Sequence Scientific, good levels to buy if you have a 2 to 3 year view. If you have a 6 month view, then probably wait it out, wait for the September quarter results, and then you'll know about Sequence Scientific better because September quarter might not be that great, and that's why the selling is happening. But if you have a 2 to 3 year view, start accumulating at these levels. A disclaimer: I have the stock in my portfolio. Yeah. Kelton Tech is an avoid, complete avoid. I have invested earlier into Kelton Tech, traded into Kelton Tech. So I would say an avoid, complete avoid. See, Power Grid Investment Trust, if you have something like a retirement fund, better to invest into Power Grid Investment Trust and could give you good returns with with dividend, etc. So that would be my call. And also thanks everyone for the Teachers Day wishes. Thanks a lot. I am also learning from all of you, so kindly take that on note. But thank you for uh, giving so much of respect to a person like me who know very little about the market and everything. I just put forward whatever I think is best for the viewers and whatever I genuinely believe could happen with the stocks or the markets. Thank you. Vipin, thanks for your contribution. Polymedicure, say Pix Transmissions is expensive. It has run up. Uh, Polymedicure can be a buy, but again, if you have an investment kind of a thesis buy, a trade cannot be taken in any of these two. But Polymedicure, from a 2 3 year view, at these levels can be bought into. You can look at 30 to 40% upside over the next couple of years on the stock. Yeah. Patel Airtime is good. I made a video earlier about it. Yes, the stock has not performed. See, all these smaller companies, I've kept on saying, I say that again, that all companies that are less than 2000 crores or around 2000 crore market cap, you need to have patience with them. You need to have at least 4 years of patience. My experience tells me with Tanla, with Kilpis, with other companies as well, be it Dixon and other companies, that any company that is less than 5000 crore market cap, you need to have a patience of minimum 4 years to really make it big. If the company is good, that company is looks decent, and kindly analyze it thoroughly by yourself also as you're investing into it. And I'm not thoroughly analyze it, and if you're invested, have patience for 3 to 4 years, and then you'll reap the rewards. Kelpest, I would say buy below 500. If you get a chance to buy at 480, 470, good levels to buy would be, with margin of safety, would be 470, 480. That would be my call with Kelpest. Sterlite Technology, good company, around 300, 280 would be better levels. I think it is at very elevated levels, so that's the only concern I have with the stock. Bharat, thanks for your contribution. MTAR Tech, very positive on the stock. When to add? So let me have a look at what price it ended up. But the company per se, the business per se is good. Have a 3 year time frame to invest into it. Another good, you can say, new age IT company that one can be looking at. I'm just opening up the charts and will let you know as to when to get into it. It's around 1330, made a low of 1250, 1260. Uh, so if I look at the chart is opening at the moment. I would say you can buy some here. It has had a decline. Now it is moving up. I think very good support around the 1150 regions, uh, 1145 and 1266. So it's good levels to buy at the moment in MTAR Tech, and have a 2 3 year time frame on the stock. Yes. Asian Granite, I would say an avoid. I think Ajaria is a better pick to take rather than Asian Granite, for that matter. Right. Saxoft, I have not, you can say, followed the company that much. I cannot comment. Tata Elxsi is very good. If you have bought, hold on to it. It will continue to perform. I see 6000 on Tata Elxsi in the next year, year and a half. If you can buy it at 42, 4300, if you get it at 10% decline, yes, you can buy into Tata Elxsi. Persistent versus large cap. I think Persistent is good. Persistent is a good company rather than buying into an Infosys or TCS. Better to buy into Persistent. See, if you have Infosys or TCS at very low levels, you're making 40, 50% in the stock, then keep on holding. They will keep on performing, and since your buy price is low, it would be fine. But if you have it at elevated levels, or you want to buy now, Persistent is a better company. Dixon is a better pick, I would say, from the two. I think around 4100 if you get it. It's slightly higher, probably 1 or 2%, 2 3% lower or at current levels. Have a couple of years time frame. I see 6000 plus on the stock on Dixon. All right. Webhub Global is also good, but it has gone up a lot. Any kind of declines or consolidation at a particular range, then you start buying into something like a Webhub Global. Procter and Gamble Healthcare is a very good company, but it's a portfolio stock. It's a portfolio stock like an Asian Paints, a Pidilite, a Bata, such kind of companies. A Page Industries similar is Procter and Gamble Healthcare. You cannot trade into it. That's my point of view. It can go to 20,000. The point is when it will go to 20,000. So that's the point. Metropolis is expensive. I would still prefer, although it looks more expensive, I would still prefer something like a Dr. Lal over something like Metropolis uh, at current levels. All right, guys. Thank you. Thanks a lot for being online, and thanks a lot for all the supports. Kindly subscribe to my channel, hit the bell icon so you get my video straight away when I post it, and kindly support me on Patreon. Thanks a lot.